Hi everyone, welcome back to Corporate Decoder. Today, we're diving into the latest annual report from TruGolf Holdings. You know, the kind of report that might make your eyes glaze over faster than a bad golf swing on a simulator. But fear not, because we're here to decode the important stuff and find out if this golf simulation company is on par for success or stuck in the rough. So what is TruGolf Holdings all about? Well, imagine bringing the golf course into your living room or a fancy entertainment center. That's what TruGolf does. They make software and hardware for indoor golf simulators. Now, this Form 10K is like their annual report card, telling us how they did last year and what they're planning. Let's start with the elephant in the room, cold hard cash. The report tells us the aggregate market value of the common stock held by non-affiliates as of June 30, 2020, 2024 was $4.9 million. Keep in mind this is just an estimate based on the stock's trading price at that time. Flipping through the pages, here's a quick roadmap of what we'll cover. We'll look at their business, the risks they face, and how they're doing financially. Plus, we will check their plans for the future. Let's look at how TruGolf sees the market. According to a market research, they have the total market for golf products was worth about $1.4 billion in 2022. TruGolf thinks they held about 4.28% of that market. They expect this market to grow a lot. Econ Market Research estimates about 11% growth every year, reaching $3.8 billion by 2031. It appears TruGolf's future plans are aligned with growth and market demands. What does TruGolf actually sell? Well, they have portable units, the Vista series, which let you easily set up and disassemble your golf simulator. Then you have the TruGolf Max and the professional level ones, Signature and Premium, which are more permanent and include high-speed cameras. Also, they do custom golf simulators for anything from luxury homes to commercial facilities. These can be pricey, costing anywhere from $10,000 to $10 simulators for anything from luxury homes to commercial facilities. These can be pricey, costing anywhere from $10,000 to 10 volt simulators for anything from luxury homes to commercial facilities. These can be pricey, costing anywhere from $10,000 to $100,000 to anything from luxury homes to commercial facilities. These can be pricey, costing anywhere from $10,000 to $100,000 to $100,000 to $100,000 to 2,000 facilities. A big part of their business relies on their proprietary Upper G launch monitor. This is tech that measures your swing and ball flight for simulation. TruGolf highlights its accuracy, ease of use, and unique features like voice control to make the experience more immersive and accurate. This is likely to be a key factor if they want to stand out of competition. Looking ahead, TruGolf is planning some big moves. First, they want to franchise indoor golf entertainment venues. They would license the right to use their simulators and software, and future locations will also operate as authorized resellers. They're also creating a virtual golf association which is designed to connect online players and create a digital golf platform with tournaments and virtual events. Another thing they are planning to do is to leverage the swing data they have collected through their E6 software, which provides insights into performance trends, consumer behavior, and purchasing intent. Who are their competitors? Well, they include TrackMan, Full Swing, Foresight, GolfZone, and others who are in a very competitive market. Some are software only like GS Pro and the Golf Club. Now let's check on the legal side a bit. There are a few SEC definitions for company size. TruGolf is categorized as a non-accelerated filler, which also means they can identify as a smaller reporting company and emerging growth company. This means they get some exemptions from stricter reporting requirements for now. Of course, this report wouldn't be complete without a look at the risks involved. We're talking about things that could throw TruGolf off course and hurt their business, like negative publicity and product defects. One specific example listed on the report talks about what happens if certain endorsers were to stop using our products contrary to their endorsement agreements. Also, it mentions that in connection with facets of our business, we collect and use a variety of personal data related to our customers. Our failure to prevent security breaches could damage our reputation and brands and substantially harm our business and results of operations. All right, let's dive into the financial numbers. Now, let's go to a very important table in the 10GA, the Consolidated Statement of Operations. This will tell us how TruGolf performed money-wise in 2024 versus 2023. First thing that pop out is they had an operating loss, meaning revenues operational costs of about $2.1 million. 2023 wasn't better at $8.6 million. Luckily, their cost of revenue decreased by $556 and it's worth noting $56. However, it's worth noting that it happened due to decrease in inventory adjustments and expenses. Now, other expenses increased by $5,069,561. An increase is primarily attributable to interest expense related to convertible loans. Let's check on their most recent cash position. The company had cash on hand of about $10,82,000 in dollars. TruGolf is utilizing available funding to support the ongoing development and production of its software and hardware product lines. Additionally, the company has allocated funding toward the expansion of the company's manufacturing capabilities. Also, they plan to open a regional office serving EMEA, formalize 2 additional international distributor partnerships, and establish its newly announced joint venture office in Asia. Let's take a quick look at cybersecurity. The report assures they engage a third party to review vendor security policies. They highlight that cybersecurity is a high priority, especially phishing and social engineering attacks, and their policy is to educate employees to identify suspicious emails. The board is also aware of these things and has the responsibility to monitor risks, along with an outside consulting firm they have, which recommendations are periodically discussed by the board. Alright, what's my take on TruGolf after digging through this filing? There are definitely some positive signs. The overall market for golf simulators is growing, and TruGolf is working to expand its product line, target new customer segments, and establish new revenue streams like franchising and data analysis. They are making progress, but I would pay more attention to negative cash flows, especially when they also have a working capital deficiency. The biggest red flag is those debt levels. Having to pay $6 million in interest expenses is not small, and it makes turning a profit very hard. One additional point, it's that TruGolf is an emerging growth company, as it means they can take advantage of certain exemptions from reporting requirements that larger public companies have to follow. While this gives them more flexibility, it also means investors might not have as much information as they would like. Is TruGolf a good investment? Well, it's definitely a risky one. The company is betting big on the future of indoor golf. Whether they will be a leader remains to be seen. Thanks for watching Corporate Decoder. If you found this helpful, please like, comment, and subscribe to our channel.